Hello everyone, thanks for joining us this morning and welcome to this educational presentation of how to become a more consistent trader with the dynamic duo. Now, I'd like to talk to you today about one of our most successful trading courses as well as most popular. We have students around the world who trade this, and I'd like to start off by sharing with you this example of how simple but how powerful this actual method is. For example, if we look at this chart here in Qualcomm, we see here that this was just about 3 or 4 weeks ago in mid to late April. Looks like the market is absolutely doing nothing. And the way most traders would perceive this is that, well, we're basically in a range market. We're going sideways. There's absolutely no action to take here. But with the dynamic duo in place, you would have actually signaled a buy setup right here. And you could have confirmed it with a dynamic duo. And in the next 2 weeks, you could have potentially captured upwards of 30 points. And you're going to see how simple it is to actually apply the dynamic duo on our platform. This is the platform that actually teaches you how to trade the dynamic duo, the PTS Primo Charting Platform. So, welcome once again. My name is Steven Primo, president and founder of Specialist Trading. I teamed up with Pro Trader Strategies about 10 years ago with one goal in mind, and that was simply to educate traders. Think of it. Think of your own trading and how you make your decisions. Is it based off of what someone is telling you to do or some signal service? The reason why most traders trade this way is because they don't have the proper experience or education in order to make their own qualified decisions. So that's the gap we fill. We give you the education so that for the first time you can be in charge of your own trading. Now, I've been trading for 42 years now. I started out on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. A specialist is just someone who made markets in about 50 or 60 stocks. I made markets in the crash of '87 and the bull market that followed. So in my 42 years, I've traded just about everything you can think of in every environment you can think of. So I know what's going to work in terms of being consistent, and I know what's not going to work. So why rely on someone or something telling you how to trade when in all actuality, that's really a recipe for disaster? It's been estimated that upwards of 80 to 85% of all traders fail. I think that's because you're relying on someone else to make your decisions for you. Why not trust yourself for the very first time, make your own trading decisions? That's what we do. We provide you with the information so that you can make your own trading decisions. You're going to see how simple that is in today's presentation. But as always, before we begin, we are required by law to share this with you. Please take a moment to view our disclaimer. I'm going to show you a lot of dynamic duo performance results in today's webinar, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. And I'd also like to take this time to invite you all to follow us on Twitter. I would suggest copying down our handle right there, abbreviation for Specialist Trading. I post different information on a daily basis. Lots of people get a lot of free education by following us, so I invite you all to follow us on Twitter. Okay, so as I stated in the opening statement, we are different from other webinars in that our only goal, our only purpose is simply to educate you. And why? Well, because I really believe in the fact that a good mentor does not trade for you, but a good mentor teaches you how to trade. Now think of your mentors or your trading gurus who you follow. Think of that. Are you following blindly some trading system that automatically spits out buy and sell signals? Or are you going to their website and going to the chat room and following what they say to buy or sell? And we don't believe in that. We don't have signal services. We don't have a chat room. Now, sure, our strategies generate signals, but everyone is encouraged to trade them to their own means. In other words, some traders like to trade them aggressively. Some like to trade them conservatively. We have upwards of 6 or 7 different entries, exits, and stop placements for every strategy. So that is basically a roadmap for everyone to trade it differently. And that's what we want. We want you to be in charge. So as you can see here, my goal is not to force feed you signals every night, tell you where exactly to buy, where exactly to sell. My goal is simply to teach you how to trade with a specialist edge. The same edge that was taught to me some 42 years ago, and what has sustained me for that amount of time, hopefully it will be able to sustain you for that same amount of time. Now, since this is going to be a class, once again, feel free to ask as many questions as possible, but please wait till the very end of class. We have limited time here, and we have a good crowd. I don't want to take up too much of your Wednesday morning answering questions for every slide, so please, if you have a question, Wait till the end of class. I promise I'll get to each and every one of them. The only question I should say that I will answer is the most common, and that is this being recorded? Yes, it is. So if you have to leave early or if you're having technical issues, we will send each and every one of you a link to this recording. Okay, with that stated, let us begin today's presentation. All right, and I'm going to start off by sharing with you what my mentors taught me, because they said in order to trade the markets today, you need a 1-2 punch. You see, it isn't just good enough to have a system that is supposed to work 100% of the time, or it's not good enough to have just an indicator, or it's not good enough to basically feel that you have a discretionary feel for the market. You need a 1-2 punch. You need more than one thing to be consistent. So the first thing is a consistent trading plan that's based on market behavior. Now, first of all, we need to break this down. When I say market behavior, I mean based off of simply what the market is telling us. Once again, the majority of traders make their decisions based off, let's say, what the institutions are doing, or what they think the specialists are doing by manipulating order flow, or what they think traders are doing with support and resistance levels, or what some guy's saying on TV. That's not market behavior. That's based on what someone or something else is telling you what to do. This is the way most traders trade. So we want to base it off of what the actual market is telling us. And then secondly, we're not looking for some fly-by-night system that never fails, okay? I've traded and taught systems before that went back 10 years that had tremendous statistics in never losing. And guess what? Each and every one of them failed. They originally started out great, and then they all blew up. So what we want is a consistent trading plan. So what does consistent mean? Consistent means a 2-step forward, 1-step back process, meaning that we know we're going to eventually have some small losses every time, and that's okay. But consistency means you have a plan that's able to recoup those losses. So don't worry about having small losses. I'll show you a few of them later on today, and we'll show you how we can increase our odds for success. So let's take this first category into consideration. How are we going to have a consistent trading plan that's based on market behavior and not on what someone or something else is telling us how to trade? Well, we have what we feel is the best remedy for that one category. That's strategy number 4. This is the first strategy that was taught to me by my mentors, and I have been trading it in some capacity for the last 42 years. All right? These are some of the highlights of this particular strategy for basically everyone. In other words, it doesn't matter if you're a hedge fund trader or if you just started trading 20 minutes ago. Everyone gets the same basic pattern, the same basic format, and then we work out from there to meet your needs. Now, it was originally designed for traders looking to catch momentum moves in short-term time frames. In other words, we were trading on the floor where we'd be in and out in 5 minutes. But now we've designed it with different variables so you can trade it that way, intraday trading if you like. You can trade swing trading, or you can trade it on monthly bars. Makes no difference. Its intensity level is a very moderate number 2. It's right in the middle. It only uses one indicator. That's how simple this is. You can apply it to any time frame, any direction, in any market. Think of that. You don't have to change just because you're switching from stocks to currency pairs or from currency pairs to Bitcoin. The same rules apply. Now, members receive automatic buy and sell arrows and indications. Now, these are not simply to have you blindly follow them. You must learn what to look for. These arrows are there to help you in your educational process. In other words, to check your work. Ultimately, we want to get everyone to be able to do where I am right now, is just be able to look at a chart and see where strategy number 4 setup is. That's how simple it is. Now, our edge here, once again, is consistency. Remember, consistency means a 2-step forward, 1-step back approach. Now, there are 2 rules that I'm going to be sharing with you today. This is how simple this particular strategy is. The strategy altogether only has 4 rules. Well, I'm giving you half of them right now, okay? Rule number 1 is buy signals can only be entered above the 50-period simple moving average, all right? If you get a buy signal in this strategy, the entry must be above the 50. This means you're in sync with the overall trend. Conversely, if you get a sell signal, well, it can only be entered below the 50. So regardless of where the signal has been generated, you must enter below the 50. Now, it's based off of the specific pattern that we teach you in the course. Rule number 2, buy signal bars must also close in the top 25% of the range. Now, if you're not familiar with what a signal bar is, when all the requirements come into play, when all the rules have been met, it usually falls on one bar. Well, that bar must close in the top quarter of its range. And if you're selling, well, you're going to be below the 50-period moving average, and that same bar where all the rules come into play, it must also close in the bottom 25% of its range. All right, let's look at an example here. This is IBM. Now, someone looking at this would say, well, gosh, Steve, we're only looking at about 10 bars or so, maybe even less. I can't get a clear idea of what this is going to do. Plus, the way I was taught is that you have to look at the company, you have to look at the earnings, you have to look at the volume. I don't see any of that stuff here. Remember, what is that stuff? It's all outside sources. That's not market behavior. That's someone or something else telling you what they think the market is doing. What is the market actually telling us? Well, the first thing you want to do is see where price is in relation to the 50-period moving average. Remember, you're only going to buy or sell above or below, so we need to know where that is. So the first thing we do is, on our platform, we apply the buy-sell line, which is the 50-period moving average. So where is price? Price is above. If all our entries are above the 50, obviously, the overall trend is up. That means we're only looking to buy here. Remember, we cannot sell above the 50. So we're only going to be looking for buy setups. Now, rule number 2 is we want to look for bars that close in the top 25% or the top quarter of their range. The range being the top of the wick to the bottom of the wick. So as we look here, we see some that closed up, but they're not in the top 25%. These all closed in the mid to lower. This closed at the very low. This closed a little bit lower the middle. But what do we have here? A bar that closed in the top 25% of its range. So that meets rule number 2. Now, there are 2 more rules that need to be met because it's based off of a pattern. I can't explain what that pattern is right now. It's a little complicated, but after a while, most traders can pick it up very easily. But I can't explain that. It wouldn't be fair because the people in the course who've paid good money for the Strategy Number 4 course wouldn't take too kindly to me giving all the rules away for free when they are members of the course. So let me just give you 2 rules. You have the first 2 rules, and as we can see later on, a buy setup was generated. The remaining 2 rules confirmed it, and the stock went up. Okay? Now, you have your choice of where to exit. You could have exited very quickly or hung on and moved your stop to unchanged. Lots of different ways to trade it. Remember, we encourage everyone to trade it differently. But either way, you had a nice profit here. Now look what happens next. Now we start to sell off and decline, but we're still above the 50. So we're not looking for selling opportunities. We're still looking for buying opportunities. Now, look at this. We have 3 bars that close in the top 25%. They're above the 50, and they met all of the remaining rules of strategy number 4. So we have 3 buy setups right here. Now, sure, we had some that closed in the top 25% here, but they didn't meet the requirements of strategy number 4. But these 3 did. And so you say, wow, well, this first trade worked out really nicely. I'm going to jump in and buy some more. And then this happens, okay? So we're not here to tell you that every trade works 100%. So this brings up to the second category. Now, also, once again, let me share with you this chart. This happens from time to time as well. Look at this. We have a sell signal. We're just barely below the 50, but it meets the requirements, and you would have lost money. We have a buy setup, which is rather anemic. It doesn't go up very well, and you would have had to be very quick to get in and out of this. We have another buy signal that goes up for one day and then would have stopped you out. And then we have another buy signal that really would have caused a lot of damage. This was just this last month in AMG, okay? So we go to category number 2. We need a tool that filters out the bad trades from the good ones. Now, we know we can't filter out every bad trade because if we did that, then that would mean we never lost. But we need something that will increase our odds for consistency by at least filtering out some of these bad ones to increase our odds. All right, so that's part 2 in our dynamic duo. So what is that? Well, that's the PET-D. You've heard me talk about it before. The single most powerful tool we have at Specialist Trading and Pro Trader Strategies. But for those of you who are not familiar with my presentations on the PET-D, what exactly is it? Well, the simplest way to define it is a translator. The PET-D is a translator that translates what the market wants to do on a tick-by-tick basis. So you see, it's not an indicator that tells you how high something will go. It's not an indicator that tells you how low something will go. It doesn't tell you if something's overbought or oversold. We don't believe in that. There's no such thing as overbought, oversold. It doesn't tell you where to buy or where to sell. It just translates what the market is doing at that moment. But what a great tool, what a great edge to have. As we see here, this is the way most traders trade. They're looking at this older chart in Zion. We see, okay, we're going lower here. Right around this point, you decide that, okay, this is really going much lower. I'm going to sell it. And the minute you sell, look what happens, okay? What if we could have a tool that translated for us on a tick-by-tick basis what the market would want to do so that we could at least get in and have our setups confirmed? Well, you click on the Pet D in our strategy tab, and the colors automatically change. A series of red bars means that the short-term trend is down. A series of green bars means the short-term trend is up. So you see, we knew well in advance that a downtrend was in place because the translator, the Pet D, was telling us. And we knew well in advance before it went straight up that the trend had changed because the translator told us it was going up. So all we do is figure out this formula automatically for us. We don't have to force you how to calculate it on every bar. We take the hard work out of it for you, and we color the bars green. They're just two colors. They don't repaint. So once the bar is closed, that's it. That's the color. Okay. Now the beauty, as you see here, the Pet D, is that it tells you which direction you should be trading. And once you know that direction, you can confirm if your strategy is in sync with that direction. So now this brings us to what we call the dynamic duo. When we combine strategy number 4, our most consistent method, with the dynamic duo, our most powerful translator, we've created really a synergy for consistency. Now, let me show you that setup again and how this could have helped us in IBN. All right, remember we had a buy signal. The first one we want to do with the dynamic duo package is to confirm it. That means this is what had to be outlined or colored green. So we apply the Pet D, and yes, that bar is green. Now, we don't care what the other bars are. Sure, if they're all green, that's fine, but it wouldn't matter if all these bars were red. Excuse me. All we care about is the signal bar, the setup bar where the up green arrow is. So that's giving you the confirmation and the confidence to take that trade, and as you can see, it worked out well. Now, let's say you're waiting for some more setups to generate, and once again, we have 3 setups right here. But what color are they? They're all outlined red. What that means is they closed up, but the outline, since the outline is red, it means that they're in a short-term downtrend. This closed as a doji, but the bar is red. This closed up, but the outline is red, meaning that the short-term trend is down. So therefore, the Pet D is not confirming this, so we would not take these 3 trades, and we would not have lost any money. See the beauty of the Pet D? It now filtered out these losing trades. How about that other example we had here in AMG? This was just last month. All right, we had a sell signal that immediately lost money. We had a buy signal, once again, rather anemic, didn't really do well. We had another buy that was up for 1 day and quickly went down and stopped us out. Another buy, okay? Now, at this point, I'm sure you're all saying, this Steve Primo, guys, like all the rest, this stuff doesn't work, okay? But if you apply the Pet D, remember, in order to get a sell signal, this needs to be colored red. What color is this? It's green. So we would never have taken this signal. And in order to take a buy signal, it needs to be colored green or outlined green. What color is it? All 3 of these buy signals are red. So we would not have taken one of these setups. Therefore, you would not have lost any money. As the saying goes, some of the best trades are the ones you never take. So what a great filter to have. Now, strategy number 4 is by itself a very consistent strategy. But once you add the Pet D, you've automatically ramped up your odds for consistency even more. You've taken your trading into 5th gear now. All right, so let's look at some more dynamic duo examples, and we're going to show you how simple it is to apply this process on our platform, the PTS Primo Charting Platform. This is the educational platform that teaches you how to trade the dynamic duo. I'm going to take you through and walk you through the process and show you how simple it is to apply, okay? Once you have our platform and once you have our dynamic duo course. All right, so let's look at this chart in QCOM once again. Remember Qualcomm, we said at the very beginning of the presentation, someone would say, well, Steve, there's no indication here. I mean, I look at support and resistance, I look at the institutions, there's absolutely nothing going on. This is a range market. I don't want to tie up my money for a month because nothing is happening. Well, once again, what are your decisions based off of? They should be based off market behavior, but everything is based off what the institutions are doing, what the earnings reports are going to come out, what some news announcement is going to say, what's going on economically. Remember, 42 years ago, those were the same things that were taught to me. And 42 years ago, when I first started trading, I couldn't make a dime because there was no consistency in those things. An economic report would come out that I would think was terrible, and the market would go straight up. You've all been there, right? Or I'd be trading a stock, and the earnings are great, and so I'd buy a bunch of stock thinking, well, that must be good news, right? And the stock would go straight down. There's no consistency in that type of trading. Why not just listen to the market tell us what it wants to do, rather than an outside source and trying to decipher what that means the market's going to do? It's a lot simpler and a lot cheaper, to tell you the truth, because everyone has the 50-period moving average. So the first thing on our platform is to click on the buy-sell line in our upper green strategy tab right here, because that's the telling us whether we should buy or sell. And the buy-sell line is just a 50-period moving average. So you click it on in the drop-down menu, click on 50-period moving average. Now, even though price is going sideways, where is it in relation to the 50-period moving average? It's above. Remember, we cannot go short above the 50. So this means we're only looking for buy setups, all right? So we now have taken our strategy number 4 course. I've taught you online in the course what to look for, the specific pattern. And so you're looking at this and you're doing your homework and you're saying, okay, let's see now. I think I know the rules. We're above the 50. I need to look for a bar that closes in the top 25%. And then there are 2 other rules, which once again, I can't divulge, that need to be met and the requirements need to be met. So after looking at this, you say, okay, I think this is a buy setup right here. Okay, it meets all the rules, all the requirements. So here's how you check your work. Once again, you go to the green strategy tab. We made it simple. Click on strategy number 4. The drop-down menu appears. Click on signal arrows. That will tell you if you properly identified a signal. And guess what? You did. So this is the learning process. Ultimately, you'll get to the point where you don't even need to apply the arrows. You'll just know automatically where these setups are. But great. Now you properly identified a strategy number 4 setup on your own. Okay? Now, no one is telling you, you didn't have to listen to any earnings, you didn't have to go to any chat room, you didn't have to wait after the market closed to see what all the gurus are saying. You're doing it on your own. Remember, this is the only way one becomes consistent. Now, we need to up our odds for consistency. We want to add the filter to see if the market is translating that it's okay to take this. Not some guy on TV, but the market. All right, so let's apply the PET D. We simply go to the green strategy tab, click on PET D once again, and automatically the bars will change either green or red. Remember, if this is a valid buy signal, this needs to be colored green. Okay, so let's click that on. Whoops. And once again, we have a bar that's outlined green. This means the bar closed up because it's a candlestick bar, but it's outlined green. Now, the 2 bars prior to it were red. That's okay. We're not concerned with those 2 bars. We're only concerned with the setup bar. So since it's confirmed by the PET D, you have the choice to take that or not. Now remember, we're not a systematic company. We do not teach nor trade systems. The reason is a system requires everyone to trade the exact same way each and every time. That's how you come up with the results and the statistics and the research. We don't believe in that. Remember, no 2 traders should ever trade alike. If this is too expensive or you don't feel comfortable or maybe you just want to see how it goes or you're still learning, you can decide for yourself. And then if you decide to trade it, we have 6 or 7 different ways to enter. So you can take any one of those variables. And then once you enter, you can decide 6 or 7 ways to exit. You can ride it for as long as possible, take a quick point and say thank you, or it's up to you. And we have about 6 or 7 different ways to place your stop. So you see all the million different variables and ways in which to trade it. This is what we encourage. No 2 traders should ever trade alike. That's a recipe for disaster. I know we've all been taught all you have to do is follow someone who's successful. Trust me, it doesn't work because everyone comes into the markets with their own baggage. Some people are frightened of fast or high-priced stocks. Other people only want 1 trade a week. Some traders like 10 trades a day. So everyone comes in with different risk parameters. So no 2 traders should ever trade alike. That's the great myth in trading. You should trade according to your own means. So you have a choice whether to take this trade or not. You have a choice where you want to buy it. We give you all the different options and variables. But it would have been a wise decision to take this trade because, as we told you, you had a profit of 30 points had you stayed in for the next 5 or 6 days. Now, remember, we're not saying it was guaranteed 30 points because you could have taken this trade and exited with a 1-point gain and said thank you, or you could have taken this trade and stayed in longer. It's entirely your choice, not ours. So we can't guarantee that you made 30 points, but you had potential to capture 30 points. Let's look at CTL, all right? Another way the way traders trade, and another way we show you how simple it is to apply this process on our platform. Looking at this chart, someone said, well, Steve, I've been following this, and this program I bought from this educator, it cost me $10,000, but this is a divergence right here because the special indicator he gave me, this low is not confirming. So this is a buy setup, so I'm going to buy somewhere down here. Plus, all the institutions really love this, so I'm going to buy this stuff, all right? Once again, every part of that decision was based off what someone or something else was telling you. Think of it. Is that the way you make your decisions? Most traders do. I know I did. Why don't we just listen to the market? First thing you want to do is apply the buy-sell line. And where is the market in relation to the 50-period moving average? Well, just click on 50-period moving average. Market is below. So what's the market telling us? It's telling us that it's below its average. It's not trading up to par. So why would we want to buy something that's not trading up to par? But just because it's below does not mean we sell at the market. This is not a strategy. It's just telling us what side to be on. Should we be buyers or sellers? We automatically know we're never going to buy below the 50, so we should have a seller's bias. Now we have to decide if we want to trade this. Well, let's look for strategy 4 setups. You've been taking the course for a while. You've learned how to determine where a strategy number 4 signal has been generated, and you think you see a couple of them, one right here and the other one right there. So here's how you check your work. Click on strategy number 4 in our platform, click on arrows, and guess what? You're right. 2 sell signals were generated, so you're learning how to identify. For the very first time, you are in sync with the market. You're not relying on someone else to tell you how to trade. You're making your own decision. Now, with our different variables for entries, exits, and stop placements, you can decide how to trade this however you'd like, or you can decide not to trade it. It's not a system. You don't have to trade if you don't want to. Let's say you did take the trade. Well, you want to confirm it with a pet D just to give you that added confidence. And not only are all the bars red, but these 2 bars here are red, so that's all you need to know, that the short term is being confirmed by the pet D. So 8 points in the next couple of months, okay? So this is how simple this process is. It's very simple, but the most important thing is that you are in charge. All right, so let's look at some other market dynamic duo signals, okay? We don't want to just, give you a couple. Let's look at things that happened in the last month. Some of these happened in the last week. All right, UFPI, okay? We are above the 50-period moving average. Now, we had one close below, but then we close right back up above. So that's okay. This is not our setup bar, but this is our setup bar. It's above the 50, and it meets all the requirements. We apply the pet D just to make sure it's confirmed. Yes, it is. It's outlined green, and stock goes up 7 points coming into the beginning of May, the first week, which was last week. Very quick 7 points you could have made. On the downside, this was in the first week of April. MC is below its 50-period moving average, so we're not even going to consider buying it. I don't care what someone tells you. The market's below its 50, you never want to buy. Now, we have all the makings of a strategy number 4 sell setup. Let's confirm it to see if the pet D is filtering out a bad or a good trade. And yes, it's colored red. So we can take this trade, 6 points in the next week, okay? Another setup, LDOS. It's above the 50. We close in the top 25%, and it meets all the other rules. So a strategy 4 signal has been generated. Let's say you're just not too comfortable. You want to make sure it's confirmed. You click on the pet D, and not only is it colored outlined green, but all the bars are green. So this gives you the confidence to take the trade. 10 points coming into the first week of May, just last week. How about EA? Now this is a little bit more advanced, a little bit more aggressive, because all these bars prior to the sell signal closed above. But this closed in the bottom 25%. It closed below the 50. And even though the bars prior to it were above the 50, it's a little bit more advanced, but that's okay. It's still a valid sell. In order to confirm it, we apply the pet D, and yes, it's colored red. So if you want, you can take this trade. Quick 7 points in 2 days. How about MAN? Okay, simple process. Once again, above the 50, close in the top 25%. We apply the pet D. It's colored green. So we take the trade, 12 points coming in to the last week of April. CVLT. Now here's where we mean by consistency, okay? What does consistency mean? Well, most people think consistency means a winning strategy. No, consistency means an awareness that you will have losses. That's okay. You want a consistent strategy because a consistent strategy recoups those losses. See, you don't want a strategy that does great. It just has a series of winners and then has one or two losses that wipe out everything. That's not consistent. What you want is a nice 2 steps forward, 1 step back approach. So we have a buy signal generated above the 50, meets all the rules, and we have a sell signal generated below the 50. Okay, so how do we filter out the right ones from the wrong ones? Well, we add the pet D, and guess what? This was filtered out. This would have been a losing trade. I mean, you would have had to be quick to make money off this because it went down about a week or so later. So we never would have taken this trade. There's no trade there. We can take the second one though, because remember, this needs to be outlined green. Outlined red, 13 points coming into the first week of May. Okay? See how simple this is. When price closes below the 50, the odds are in your favor if you are a seller with a seller's bias as opposed to a buyer. See how simple this is. Now remember, just because we close above or below the 50, that does not mean to buy or sell at the market. It's not a strategy. It's simply telling you whether you should have a buyer's bias or a seller's bias. Once you know what side of the market to be on, that's why we call it the buy-sell line, then you apply some structure in the form of strategy number 4 and the pet D. Now, if you missed that, the beauty of strategy 4 is it generates a lot of signals. So even if you didn't take this one, there were two good setups right here to take prior to that large drop down. All right, man H, okay? Same process, above the 50 period moving average. Now we have 2 buy signals generated. Which one should we have taken? Well, we apply the pet D, and both of them were good. Okay, so we could have taken either one. 12 points coming into the end of April, just a couple of weeks ago. All right, here's another setup where we have a buy and a sell in CHRW. This is where traders say, well, gosh, I didn't know which one to take. Now, I followed all the rules. It was just above the 50. It closed in the top 25%, a valid buy signal. But now I have a sell signal. Can I just stay in this? I think it's going to go up higher. The majority of the bars are above. Well, let's see what the pet D told us. We applied the pet D, and it was actually green. But if we see that the sell signal is valid and colored red, what the market is telling us, not what some guy in a chat room, but what the market is telling us is that it's changed its mind. It originally wanted to go higher, but the markets are fickle. It changes its mind any minute it wants to. So the beauty of the pet D is it's just translating. The pet D translated that the market changed its mind and now it wants to go lower. So you would have had a small 3-point loss here. Take your loss, but don't sit in the corner and just, turn into that victim and say this stuff doesn't work. Get back on the horse and take the next trade, because had you done that, well, you would have had a potential to capture 10 points, which would have recouped the loss and potentially made you even more. So this is what we mean by consistency. There will be losses from time to time, but you want a method that's able to recoup those losses. All right, WBA. We are below the 50. We have a couple of closes above, but now right back below. We close in the bottom 25%, and according to the other rules of the strategy, it is a valid strategy number 4 signal. Now, in order to validate it, we just want to confirm with the pet D. And yes, the pet D colored the bar red. Now, all these bars were outlined green, but this bar was outlined red. So this gives us the confirmation and the confidence to take it, to go short. And look what happened. Fell out of bed there. In fact, it fell 19 points, and it gave you all these second, third, fourth, fifth, sixth chances to go short along the way. So if you miss the first signal, don't worry. There's a lot of other ones you could have taken. You see how the odds are in your favor to only be in sync with the 50-period moving average. Why? Because you're listening to the market. If the market is below its 50, it's telling you my overall trend is down, so why try to buy? You're better off trying to sell, and vice versa. APC, all right? Now we're kind of oscillating above and below the 50, but we have consecutive 1, 2, 3, 4, 5, 6 closes, and it is confirmed green. So that's enough to take this trade should we decide to do so. That would have been a wise choice. APC up 28 points. Obviously, some news came out a week later to make it gap up and then gap up even more. Did we follow the news? No, it's not required at all. Strategy number 4 does not have any news or any economic numbers or any fundamental requirements in it. And someone would say, well, then how would you know to buy this? Because the market told us. You see, there's no reason, if you don't want to follow that. Trust me, I followed that 4 decades ago. It was too difficult trying to decipher what good news meant and what bad news meant. Half the time it worked, the other half it didn't. But guess what? When it didn't work, I'd give everything back. So this is a lot easier, a lot simpler. Just apply the 50-period moving average. You have that in your possession right now. Virtually every charting software package gives you the ability to plot a 50-period moving average. All right, so let's look at some other markets because I don't want you to think this only works with stocks. All right, here's the British pound. This is a 4-hour chart of the British pound, and this was just last week in May. All right, the first week of May. Price is above the 50. We have a buy signal that worked out right here, and we have another buy signal. Now, if we apply the PET-D, we see that they were both colored green. Here's another example of what we mean by consistency. Had you taken this trade, most likely you would have lost money or been stopped out. If you got back on board and took this trade, the second one, well, you could have recouped that because you had the potential to capture 150 pips. Once again, consistency. What about the E-mini? Here's a 10-minute chart of the E-mini in the first week of May, last week, all right? We have consecutive closes on a 10-minute time frame below the 50-period moving average. See how nothing changes because we changed markets or changed time frames. The same rules apply. A 50-period moving average, we have a bar that closes in the bottom 25%. It meets all the rules of the requirements of the strategy, so we have a sell signal. In order to get a little bit more confidence, we apply the PET-D, and not only is this colored red, but all the bars have been red. So you want to take that signal if you're an aggressive trader, and 40 points in the next day or so. All right, that's $2,000 potentially per contract. Now, lastly, Bitcoin. A lot of traders the last couple of months were saying, well, Bitcoin's dead now. It had that big move last year, and now it's just basically going sideways. Well, not really. Bitcoin really isn't dead, even though a lot of people may think that, because Bitcoin has been, if you apply the same process, the 50-period moving average, it's been above its 50-period moving average since February. So it's telling you that the overall trend is up, and you should be looking at this from a buyer's perspective if you're considering buying it. All right? Now, you know the rules to strategy number 4. Same rules that we taught you, rules 1 and 2. They're right here. We close above the 50 in the top 25%. You click on strategy number 4, click on signal arrows, and you're right. 2 buy signals were generated. Now, just to make sure, to give you confidence, if you want to trade this, click on the PET-D, and the bars will automatically change color. All we want is that the arrow bars are outlined green, which they are. So you have the confidence to take these 2 trades should you decide to do so. It's up to you. That would have been a wise decision. Up 1,700 points coming into the end of April. Now, if you missed that, not to worry. Another buy signal was generated just a couple of weeks ago. All right, so let's recap before we go into question and answer, okay? Remember, in order to succeed in today's markets, you need much more than going to a chat room or having some indicator you spent $5,000 on. You want to have a 1-2 punch. So what is this process that we call our dynamic duo? Well, strategy number 4, when combined with the PET-D, creates the dynamic duo. So ask yourself honestly, do you think the dynamic duo could have helped your trading this past year? Now remember, I showed you examples that were just mostly from this past month. Some were from this past week. That shows you how consistent this is. We're not trying to cherry pick examples that happened 6 months or even 2 years ago. We're showing you things that are happening all the time with the dynamic duo. We have a great offer for all of you attending today. We're going to offer you a great discount on our dynamic duo package. This is our dynamic duo special. You're going to get instant course access, detailed instruction. We're going to give you all the different variables for entries, exits, and stops, the automatic buy and sell arrows included. And this comes with the PET-D, 4 PET-D trading techniques as well. Includes both add-ons if you want to use them on your charting software package, such as TradeStation, Metastock, Sierra Charts, NinjaTrader, MT4. and educational correspondence from yours truly. But we also are offering a special bonus on top of that. This extra bonus is our platform. We're going to give you 12 months of our platform. It's a lot simpler to apply the dynamic duo process on our platform than as opposed to using it on your own platform. Remember, I showed you how simple it is because everything's pre-canned. You just have to have one-click access. Now, 12 months of our platform would usually run you about $1,700, $1,800. Guess what? We're not going to charge you that. We're not charging anything. We're giving you 12 months free of the platform. Now, you're not just getting the Dynamic Duo package. You're getting, obviously, Strategy 4 with the Pet D, but you're getting proprietary exit levels. If you go on our Twitter page, you'll see where I've tweeted in the past about our automatic exit and entry levels. Those are all included. Over 90 of the most prominent technical indicators, our scanner, Bloomberg TV, personalized tech support. But let me share with you about some information about our scanner. It is such a simple process. You can scan on a nightly basis for all the dynamic signals for the next day. All right, this is how simple it is. And let's say you had this Dynamic Duo special a couple of weeks ago. You would have been able to scan that ROG properly identified a strategy number 4 buy setup on the night of 4:30. And you could have actually scanned 5 minutes before the close on 4:30 and jumped in and gotten into the trade. Okay. Now you also could have applied the Pet D and seen that it was a dynamic duo signal because it was also outlined colored green. So this could give you the confirmation to take that. And guess what happened on the very 1st of May? This was, I believe, a week from today. This was a week ago. Stock could have potentially captured 40 points in one day. Now, this is what you could have done with our scanner, with the Dynamic Duo package, with our most popular as well as consistent package. We have students around the world trading this in over 115 countries and in virtually every state in the United States. So take advantage of this special. Let me explain to you. Firstly, let's break down what this would cost you if we didn't have this great special today. Strategy number 4 roughly would cost you, if you just purchase it individually, cost you roughly about $700. The Pet D, if you purchase it individually, close to $3,000. But including all that with the platform, I mean, we're talking just $3,700 for this alone. And with the platform, we're talking about close to $5,000, okay? We're not going to charge you anywhere near any of that. In fact, we're only going to charge for this Dynamic Duo special a one-time charge of $497, which includes $97 per month. Think of that. What would normally cost you close to $5,000 is just going to cost you a one-time fee of $497 and then $97 per month after that. Now, this is a one-time payment of $29.95. If you just want to take care of it and don't want to have those monthly payments, you can pay $29.95 though. And the 1 year of the PTS Primo Chart platform is entirely free as well. This is a great, great offer. So there's 2 different options. Have the down payment of $497 per month, excuse me, or $29.95 takes care of everything, which also includes 1 free year of the platform, okay? Either way, you're getting 1 year of the platform. This is a great, great offer. All 3 of these 3 things together, this is what I use on a daily basis. And once again, if you have any questions about the trading or if you're still having trouble understanding how to identify a signal, you can always have educational correspondence with myself. You have my personal email address. You can contact me whenever you'd like. Here's how to take advantage of this, okay? Contact Pro Trader Strategies. I designed the platform with them, and they handle all of my course pricing as well as the discounts. You can reach them by either emailing them at trading@protraderstrategies.com or calling them directly at 310-598-6677. Now, that link you see at the very bottom right here is the link that takes you to the sign-up page if you want to sign up online. I don't believe it's a live link. You'd have to copy and paste that, but go to your chat box. I'm going to post a live link right now. Yeah, there's a live link on the chat box. If you want to go there, that will take you automatically, and that will you don't have to copy and paste that link on the bottom. Now, remember, I would suggest and recommend contacting Pro Trader Strategies. I would say call them directly. If you have any questions about pricing or discounts, perhaps you have maybe one of the packages already. We know we have a lot of students that have already purchased Strategy 4 or the Pet D. They will be happy to work with you to give you a different discount or so. So contact them. There's no obligation. They have trading consultants manning the phones right now. They would be happy to answer any question you have. I'm going to leave this information up here. Remember, I said if you have any questions, feel free to go to the question and answer box and write them in right now. But once again, I would strongly take advantage of this great offer because, once again, if you bought this separately, so let's say you wait for another couple of weeks and say, you know what, boy, my trading is just getting worse and worse. I think I'm going to try that dynamic duo special Steve talked about. Well, it may not be at Pro Trader Strategies anymore. They may go back to the original price of roughly $3,700. And if you want to get 1 year platform, you're going to add another $1,800. So we're talking over $5,000. Why not take advantage of this for less than $500 one-time fee, and then you can pay $97 a month. It's a great, great way to get acquainted with us, okay? See, some of the people asking questions. Does this work on other markets? Yes, I don't know if you didn't see there, but the last 5 minutes, I showed you examples in Bitcoin, also in the E-mini, and in currency pairs. So yes, you can apply this to any market, any time frame. I currently like to use this intraday trading with the E-mini because it works so well on that as well. And, you can apply it any way you like. And it's a great, great tool. So yes, if you're thinking about a different market, or even commodities, we have students that trade this with commodities, okay? Let's see, someone is asking, can you also apply this with different strategies? Well, yes, a lot of traders have their own strategies, and many times they're based on entirely different, requirements, different rules. But I think the PET-D would help you in terms of confirming it. So yes, you can apply this as well. I would recommend, if you're trading a different strategy right now, go back and apply the 50-period moving average and that first rule I shared with you about where price is. I can almost guarantee that if price was above the 50 and you were selling, you mostly were losing money and vice versa. Most of your losses will most likely be because you're out of sync with that rule. So if you go back and back test that, you say, boy, this really works well, you'll see how much we're really trying to educate you to become a better trader. So if that simple rule, which I gave you for free, works well, don't you think that the entire dynamic duo package is really going to help your trading, okay? So why not join the literally hundreds, if not thousands of traders around the world? Why not become a member of our dynamic duo group around the world, all of our students, and really try to take your trading to the next level? Take advantage of this great offer. Remember, you can either purchase it with a one-time fee of $29.95. You won't have to worry about any other costs. It's all yours. Or you can have a one-time payment of $497, less than $500, and only $97 a month. And with both offers, you still get 1 year free of the PTS Primo Charting Platform, okay? As we close here, I just want to say thank you so much for attending today. I really hope you learned something. I really look forward to all of you becoming students of mine. And give Pro Trader Strategies a call. Remember, there's absolutely no obligation. They have trading consultants manning the phones. They would be happy to answer any other questions you may come up with later on, okay? But take advantage of this soon before the price goes back to upwards of $5,000 to $6,000. Thank you so much for attending today. I wish you the best of luck. I look forward to all of you becoming students of mine in the Dynamic Duo course. Thanks so much. I'll see you next time. Bye-bye.